Hello, my name is Oliver and welcome to my very personal finance channel. Looks like it's been a bit of a bad month for the stock market. Already down just over 1% this week. If I go to the month. And as you can see, we were sort of earlier this month, we were up around the 13-14% mark. Now we're all the way down to 9.8. Now, it's April, so it's the start of the tax year. A lot of people will be restructuring their portfolios, they'll be taking profit, redistributing them, so it's no surprise that things are dropping. It's just one of those things, it's just part and parcel of being invested in the stock market. With that in mind, I have thrown a little bit more into stocks this month in order to try and capitalise on the stock drops. I don't think I have done as well as I would have liked, but let's go over the purchases. Okay, so as I said, I've thrown a little bit extra money into this. So the first purchase that we made was AGNC investment. As you can see, that's our average buy line, and we are down nearly 20% on AGNC investment. It keeps on dropping, which is a good thing, I suppose, because we're buying. If we go into return, you can see we're actually down £521, but because of the foreign exchange, we're up nearly 150, so it's averaged out at £372. And for those of you who have watched this before, you'll know that I really like AGNC investment, so we've put another 30 shares onto our portfolio, coming to a total of £276. Moving down, we've also got Powerhouse Energy, another company that I am incredibly excited about. Despite the fact that every single time I buy, it seems to disappoint. I bought another 3,000 shares in these guys with the intent of firstly bringing down my average cost per share, and secondly I thought that if I was to buy some more shares, then when I came to sell them, it would cover the tax bill, because I'm hoping to sell them for a fair whack in a few years. Next, we've got AGNC investment, the exact same reasoning as Powerhouse Energy. So we've just bought another 2,000 shares of them, bringing down our average cost, and that is currently down 44%. So again, another big loss. As you can see, our average price is 10 cents. It was previously 14 cents, so we've made a dent. And the final share purchase was Tesco. Bought 48 Tesco shares, so I brought our average cost up just a bit. It was previously all the way down here, but for the exposure, and hopefully we've bought in the dip. You don't really know where it's going to go, I suppose, but hoping that this is within the dip, and that's going to put us on 270 shares total for Tesco's, which is good because we're just in time for the dividend of 7.7 pence. I think they're going to pay in June. Okay, and moving over to dividends, we have got £11.39 paid by AGNC investment just here. As you can see, they paid 12 cents like they normally do, and we paid a 15% tax rate like we normally do, and it came to a total of £11.39. We also have a dividend from Glaxosmithkline. That's for £11.50, and they paid 23 pence per share, and they pay quarterly, and I believe that their next share price is going to be quite a bit lower at about 13 pence per share rather than 23. So we'll see what happens to the share, and if it drops substantially, we'll buy a few more of those, I think. And for anyone who watched last month, I was very excited about March because I'd managed to sort of remove the deficit, as it were, between my months, but it turns out all I've done is I've just moved it over to April. So I'm going to go chuck these numbers into a spreadsheet, and we'll see what it looks like. Okay, so throwing these numbers into the spreadsheet, as you can see, April, we have got £22.89 there. That brings our average down to £27.21 just here. And looking at last year's numbers, which are the red line, it looks like we are definitely heading in the wrong direction. So we went from March last year to April with an upward tick. This time we've gone from March in 2022 to April with a downward tick. So it seems like I have moved the problem down a month. That's okay. We'll just keep working at it, and we'll tweak it over the course of this year to hopefully produce something better for next year. And I suppose that's all you can really do with stocks. It's just sort of work at them. And that's everything from me. Goodbye.